Okay, first the question is calculate the contribution margin per unit and the contribution margin ratio. The formula for calculating contribution margin per unit is contribution margin equals selling price per unit minus variable cost per unit. The value for the selling price per unit for this case is RM30 and subtract RM13 for the value for the variable cost per unit. So for the total contribution margin per unit is RM17. Meanwhile, the formula to find the contribution margin ratio is contribution margin per unit divided by selling price per unit. So the value to be divided is RM17 and RM30. Therefore, the total contribution margin ratio is 0.5667 or 56.67%. Therefore, the contribution margin per unit gain is RM17 and the contribution margin ratio gain is 56.67%. The next question is determine the break-even point in unit and sale revenue. Formula for calculating break-even point in unit is total fixed cost divided contribution margin per unit. Value for the total fixed cost is RM1000 and RM17 value for contribution margin per unit. And the total is 59 units. Formula for calculate break-even point in sale revenue is break-even point in unit multiply selling price per unit. So the value for break-even point in unit is 59 unit multiply RM30 for the selling price. So the total is RM1770.
Okay, so now we will move on to question C, which is to prepare a CVP graph showing the break-even point and the profit or loss area. So basically, the total cost line starts at RM1000, which is also known as the fixed cost, and it increases with each unit sold due to variable costs. The revenue line starts at 0 and increases linearly with units sold. The point where these two lines intersect represent the break-even point. The break-even point is at 59 units, where the revenue is equivalent to RM1770. This is the point where the total revenue cost covers all fixed and variable costs, resulting in zero profit or loss. The company incurs losses because the total costs exceed the revenue. In the loss area, which is below the break-even point, the company incurs losses because the total costs exceed the revenue. In the profit area, which is beyond the break-even point, the company generates profit as revenue surpasses total costs.
So for question D, analyze the sensitivity of profits to changes in sales volume. Profit equals to selling price per unit times unit sold minus variable cost per unit times unit sold minus fixed cost, which is equals to contribution margin per unit times unit sold minus fixed cost. At 0 units, the company incurs a loss of 1,000 ringgit due to fixed costs. Selling 50 units reduces the loss to 150 ringgit. At 100 units, the company achieved a profit of 700 ringgit. Selling 150 units result in profits of 1,550, and at 200 units, the profit increases to 2,400 ringgit. So this demonstrates that the higher sales volumes lead to higher profits, as each unit sold contributes 70 ringgit towards covering fixed costs and generating the profits.
Based on the analysis, provide a recommendation on whether the company should participate in the sales carnival and justify the decisions. The company break-even point is 59 units, which corresponds to 1,770 in sales revenue. This can be calculated using the contribution margin ratio of 56.67% of 0.567. For every 1 ringgit of sales, contribution toward fixed cost and profit, there is contribution margin ratio times the selling price per unit. 0.567 times 1 ringgit, that is become to 57 cents. This means that each 1 ringgit of sales revenue effectively covers 57 cents of the fixed cost until the break-even point is reached, beyond which is contribute to profit.
Okay, I will proceed to the last question, which is if the company wants to have a profit of 10,000, how much unit sales should be made? So by applying the formula, which is fixed cost plus target profit divided by unit contribution margin. We will add 1000 with 10,000 target profit and then divide by the unit contribution margin, which is 17, and then the result will show the company actually needs 648 units to hit the profit of 10,000. Okay, so that's it for our group presentation. Thank you.